in the books of Ashwini, I think, in the books of Ashwini Company Limited, we have the Jalgaon branch account. We have the Jalgaon branch account. Besides that, we also have to prepare the debtors account. We can call it branch debtors to be a little more specific. Branch debtors account, and we also have to prepare the branch cash account. Sometimes if there are bank transactions, uh, you will have to prepare the cash account with cash and bank column. I've done it in one of the previous problems. Okay, but here just cash, so there's no bank involved at all. Okay, so let's start. So we have the opening balances on 1st January 2006. Sorry, 1st April 2006. Two balance brought down. We have stock, which is 15,000. We have debtors, which is 9,000, and there is cash, which is 800, and we also have furniture, which is 8,000. Furniture, which is 8,000. Now, we need to be a little careful of stock. Since it's at invoice price, we need to find out the loading, or we call it stock reserve for opening and closing stock. Okay, so and basically, since the percentage is given on sale or on invoice price, we don't need to convert it. So what I'm going to do on the other side, directly on 1st April 2006, buy stock reserve, which is the loading. I will calculate it here itself. It is 15,000 into 20%. 20% is also 1/5, so you can do it as 15,000 upon 1/5, which gives you 3,000. Why I have not converted, I have not done that cross multiplication, because the percentage here is on sale price. Comes very important. It's very important. Okay, it's 20% profit on sale, not on cost. 20% profit on sale, not on cost. So that makes all the difference. If it was on cost, then I would have had to convert it. So 15,000 is for 120. For 20, it is how much? Then you would have got 15,000 into 20 upon 120. Okay, it would have had to be done that. Similarly, so we have done the stock reserve. I have to show the opening balance of debtors. Two balance brought down, 9,000. We also have cash. Two balance brought down, 800. Okay. Next. So goods received by branch from head office, invoice price. So this comes as on 31st December, sorry, 31st March 2007. Two goods sent to branch account, which is 90,000. And since it's at invoice price on the other side, we have to calculate loading accordingly. 31st March 2007, buy goods sent to branch account. In bracket, this is the loading to eliminate that element of profit. So here we will have do the calculation accordingly. It's going to be 90,000 into 20% or 1/5, which is 90,000 into 1/5, I think comes to 18,000. Comes to 18,000. Okay. Next is goods returned to head office. That is, now the branch is sending goods back to the head office. So here we have buy, same thing, buy goods sent to branch account. Okay, that is 2000, and accordingly we need to calculate loading on the other side. Two goods sent to branch account. This is loading, and it will be 2000 into 20%, which comes to 400. Comes to 400. Okay, so the loading is always on the opposite side. So basically, if you check, the actual cost of these goods was 1,600. The actual cost of these goods was 90 minus 18 comes to 72,000. That's what it means. The actual cost of the opening stock was 12,000, but it's shown at 15,000, and that's why we are showing the stock reserve to show it at the correct value. Next, we have cash received from debtors, 32,000. So that's going to come here. Buy cash. You have debtors, which is 32,000. This is also going to come in the debtors account. Okay. If you get confused as to which side it should go, okay, just pass the journal entry. The branch is receiving cash. The branch is receiving cash. So it's going to be cash account debit to debtors. So in the debtors account, it will be buy cash. Okay, and the amount is 32,000. The amount is 32,000. Then we have goods returned by debt. Sorry, cash received by debtors also comes in the, keep forgetting this, in the branch cash account. So if you are receiving cash, okay, again the transaction is the same. Cash account debit to debtors. So cash account debit to debtors. The cash account debit to debtors 32,000. You can say here if you want buy branch cash or buy branch debt, two branch debtors if you want. Not required. This go more as working notes. Okay. So I hope everyone's understood. Cash received from debtors, the transaction is cash account debit to debtors. So in debtors it's buy cash, and here it's cash account debit to debtors. Next one, cash goods returned by debtors. We said this affects only the debtors account. Okay, so returns also will come on the credit side. Buy returns, which is 1,000. It's basically goods account debit to debtors. The debtors are returning the goods. Goods account debit to debtors. So in debtors it will be buy returns or goods return. Next we have, that affects only the debtors account. Next we have cash sales. So cash sales is going to come in the branch account because the cash has to be sent to the head office. So cash sales are 52,000. This is also going to affect the cash account. You're receiving cash on account of sales. So to sales, the fact that it is in the cash account, it's understood it's cash sales. If it was credit sales, it would have never come here. The fact that it is in the cash account, the sales are understood, it is cash sales. If it was credit sales, we couldn't put it here. Okay, so cash sales are 52,000. Cash sales are 52,000. Then we have credit sales. This affects only your debtors account. So to credit sales, which side will credit sales come? Which side will credit sales come? Debit or credit in the debtors account? It's going to come on the debit side. You can, the entry will be debtors account debit to sales. Okay, debtors account debit to sales. For example, who are, say for you're selling goods to Mr. A, okay, on credit. So it will be Mr. A's account debit to sales. Now, instead of saying Mr. A, we have all the debtors put here. There could be A, B, C, D, E, all the debtors. So we say debtors account debit to sales. So that's how you get the entry. I hope everyone, if you get lost, the journal entry is your savior. You know the journal entry, you can easily pass it in the accounts. So branch debtors account to credit sales, which comes to 30,000. Okay. Then we have discount allowed to debtors 600. So discount again is an expense because you're allowing a discount, you're giving a discount. So it's discount is an expense, discount will be debited. Who are you giving it to? Your debtors. So discount account debit to debtors account. So in debtors account it will be by discount. By discount the amount is 600. Discount the amount is 600. Okay. And next we have the expenses. Expenses paid by the head office. So to cash, we'll assume it's paid by cash. You have rent, which is 1,500. There is salary 3,000, and we also have printing 600. Okay, I have one question for you here. Now, since I have two cash here, will this affect the cash account? These are expenses paid by the head office. Will it affect the cash account? Will this affect the cash account, the branch cash account? No. Can you tell me why, Rishvesh? Why would it affect the branch cash account? Or anyone can? Yeah. Okay. Now we can look at it in two ways. Okay. Head office has paid these expenses. We can look at it in two ways. Head office can directly incur these expenses. So if he has to, the head office has to pay the rent. Maybe the rent is paid directly to the landlord. Getting the branch is not involved at all. This can be one way. So that's why it's not affecting the branch cash. This is branch cash transactions of cash transactions that have taken place at the branch. Okay, we can also look at it in another way. Okay, it could be a possibility that the head office has sent cash to the branch for these expenses. Okay, the head office has sent cash to the branch for these expenses, and the branch itself has paid for these expenses. Even in that case, it's not going to affect the branch account. Why it won't affect? Say, suppose the head office has sent cash for those expenses, we will show it this way because cash is coming in, increasing the balance of cash, and then the branch will eventually have to pay for the expenses. So that will come this way. So if you see, the net effect will be zero. So even if you assume the second scenario where the cash is sent to the head office, it won't still matter in the branch cash account because it will come this way and it will come this side also. Okay, so either ways it doesn't affect the branch cash account. If the head office pays it directly, it has got no relevance at all. Even if the head office is sending cash to the branch will automatically pay for those expenses and the effect will be nullified. Is that clear? I hope this is understood. Okay, so even if though I've said cash here, this has got nothing to do with this, with the branch cash account, because end effect will be nil. Even if though the head office is sending cash to the branch, end effect will be nil because the branch is eventually paying for those expenses. Here they have not told us how it is done, whether head office has paid for it directly or sent cash to the branch. We are assuming that the head office is paid directly. Okay. Next, petty expenses paid by the branch manager, rupees 400. Now, like we discussed, this does not come in the branch account at all because it has got nothing to do with the head office, but it comes in the cash account. And by petty expenses, since cash is going out, so by petty expenses, It will be petty expenses debit to cash. Cash is going out, which is 400. Okay. I hope everyone's understood this. And then we have they've told us depreciation is to be provided on branch furniture at 10% per annum. So that's the closing balance. So to show the closing balance, I will leave one line in case we have the balancing figure this way. I will leave one line. So by balance carried down, we already know the stock. The stock is told as 18,000. Okay. I'll leave line for debtors and cash, which is going to come. Cash, and we also have furniture. Okay, now furniture, the opening balance, if you see, was 8,000. Furniture opening balance was 8,000. So it's going to be, and they've told us to depreciate furniture. So when we're showing the closing balance, we will show 8,000 minus the depreciation, which will be minus the depreciation, which will be 8,000 minus 10%, which 8,000, 10% of 8,000 is 800. So 8,000 minus 800 will be 7,200. Okay. Don't forget that we have to calculate loading on this stock. Okay, sometimes you may miss it out. Whenever there is stock and if it's done at an invoice price or cost plus at a profit, you have to calculate loading. So this side we will have two stock reserve. For closing and opening stock, it is shown as stock reserve. But for the other movement of goods, goods sent to branch account. This is loading. So it's going to be 18,000 into 20%, which is 3,600. 3,600. Okay. We'll close this now, these accounts, to find out our missing figures. So here you have 39,000. This side you have 39,000. By balance. By balance carry down, you will have 39 minus 33 is 6,000, 5,400. I'm not mistaken. Yeah, 5,400. This is the balancing figure. And similarly here also you will have the balancing figure. The total here is 84,800. So 84,800. The balancing figure is 84,000. Okay, so now we go and transfer these figures here. So the debtors is sorry, 84,400. Debtors is 5,400 and cash is 84,400. 400. Okay. I think that's it. We are done with this. Let's just total it and check. Eighteen plus 3 is 21,000 plus the 84, 86,000 plus 18,000 plus 54 plus 84, 400 plus 7,200. 2,22,000. I think the credit is higher than the debit. 2,22,000, and this side we have minus 24,000 minus 88 19,400 minus 5. I think I've got the figure slightly wrong. Sorry, sorry, sorry. Does anyone have the total here? Anyone has done it besides me? Okay. There is a slight, I just forgot one thing. There is a slight mistake in the cash account. We have not included one transaction. Can anyone tell me what is it? We have not included one transaction. This balancing figure is not correct. We have not included one transaction. Can anyone tell me what it is? There is something that we have not included. It's not mentioned here, and that's why I skipped my mind. It's not mentioned here, as in it's not directly mentioned here. But we need to do it considering, thinking from the point of view of movement of cash. From the point of view of movement of cash, we need to consider it. Can anyone tell me what it is? Quick, quick. Can anyone tell me what it is? Look at this. Look at all these transactions. You had an opening balance of cash 800. Okay, so you had a cash of 800 rupees. Very good, Rupa. Only sales? Only sales? Okay, we had an opening balance of 8, correct. We had an opening balance of 800 rupees. We received an amount of 32,000 from debtors. We received an amount of 52,000 from sales, cash sales. Cash received from debtors, cash sales. But we know that we have sent this to the head office. We know that this has been sent to the head office. So if we don't show it on the other side, we will have a huge balance of cash. Okay, so these amounts have been sent to the head office. So I'm going to show this way head office, by head office, 32,000 plus 52,000. 32,000 plus 52,000, which comes to 84,000. So basically our cash balance is only 4. Okay, so this, always remember that you need to do this. If the cash is sent back to the head office and if you're shown it this way, you have to also show it this side. Otherwise, you will remain with a huge balance of cash, like how we had 84,400. Actually, if you actually go to calculate, count the cash at the branch, they will have only 400 left. Because how they'll have only 400 left? They started with a balance of 800. Then they received 32,000, 52,000, which was sent back to the head office. Out of 800, 400 was spent on petty cash. So basically only 400 is left at the branch. Okay, so 400 is the cash balance. It's not 8,400. 400 is the cash balance. So basically it will be the 2,22,000 is wrong. It's going to be, this total is 1,38,000. 1,38,000. And profit is 15, 9, 15 plus 9 is 24, 24, 800 is profit is 6,100. Yeah, correct. 6,100 is correct. So profit and profit and loss account 6,000.